everybody, happy 2020. I'm going to try something, a reboot of something I've tried in the past, and that is to just answer a bunch of questions that people have sent to me throughout the day, throughout the week, and just try to pass on as much information to you as possible. I get questions all the time about taxes, about business setups, about accounting, and the goal of 2020 is just to share as much information as possible. So I've got 4 questions that I'm just going to read through, and these are literally items that I've gotten in the past 2 days. And so here we go. Number 1, Justin, I got a W2 mailed to me, and it's only for a few $100s. Do I have to put that on my tax return? The answer is yes. Somewhere along the lines, somebody has reported to the IRS and to New York State that they have paid you some money, and thus you have received the W-2. If you don't report that, what will happen, maybe not right away, but eventually the IRS and New York State will marry up the records of what your employer has sent in versus what you have reported on your tax returns, and then you're going to get a penalty, and you're going to have to pay taxes, and you're going to have to pay interest on the past due wages that you earn. So always report every W-2 that you received, and every tax form that you received for that matter. Question number 2, how do I account for gift card sales? So I've got some clients that are collecting money and they're issuing a gift card. So the idea being that they're going to redeem that gift card in the future. So there's 2 ways to account for this. One, if you are a cash basis taxpayer, so when you do your taxes, you're going to check a box that says cash basis. What that means is you recognize revenue when you receive the cash, as opposed to the accrual basis, you recognize the revenue when you earn the cash, which could be in a future date. So if you're collecting money for gift card sales, if you're a cash basis taxpayer, you are going to report that revenue as earned in the year that you collect it. As opposed to the accrual basis, you're going to collect the money, deposit it into your bank, but you're going to record a corresponding liability, because that's money that is eventually going to be used in the future. So when somebody comes back to you in the future and uses that gift card, you're going to decrease that liability, and you're going to recognize the revenue at the time that the gift card is used. So a couple different ways to think about it, but I always like to do it on the accrual basis, because I've got some clients that have, tens of thousands of dollars in gift card sales and liabilities that haven't been redeemed. And so is it fair to them to pay all the tax on it when the sale is made, or should they wait until somebody has actually earned / used that gift card in the future? Got it? Okay. Question number 3. Justin, do I need to charge sales tax? Answer is, it depends. Depends what you're selling. The easy, quick answer in New York State is, if you're selling a service, like accounting service, that is a non-taxable transaction. Likewise, like with legal services, it's a non-taxable transaction. Photography services, I'm taking a picture for you, non-taxable service. But if there's something tangible that you are taking from the sale, then chances are that is a transaction that you should be charging sales tax for. In the example of the photographer, if you hire me to take your pictures, the transaction of me taking your pictures is a non-taxable transaction. However, if I am now selling you prints on paper or in the future, those transactions, that particular product that you're giving to the client, is a taxable transaction. Now there's all kinds of weird nuances, and New York State law is twisted and crazy. So like a service would be mowing your lawn, but in New York State that's a taxable service. So it's very convoluted. If you're unsure, I would definitely recommend asking an accountant, or I can point you in the direction of where to find those resources on the New York State tax website. Registration for New York State tax is very simple. You get a turnaround in a couple days, but don't ever go through the motions and be not sure that you're going to collect sales tax, because I've also seen a lot of people get penalties if they're ever audited not collecting sales tax appropriately. So keep that in mind. Last question of the day. is how do I calculate the mileage reimbursement on my tax return? So in 2018 and going forward with the new Trump tax laws, there's no unreimbursed employee expense related to mileage anymore. So that has gone away. You've got to be a sole proprietor, have some kind of a business, and run it through your tax return from the business side only. The reimbursement is going to be 58.5 cents per mile in 2019. And so the idea would be you've got to keep track of all your mileage, have some kind of documentation showing that mileage on paper or use an app, just like I use MileIQ. It will keep track of your mileage whenever you start moving in your car, and then once a week I'll sit down and swipe right for business, swipe left for personal, and it keeps a really detailed listing for me. That's the easiest way I can recommend to do it. Use an app, but if you were to get audited, the IRS is going to be looking for something on paper or in electronic format documenting the actual miles that you have claimed on your tax return. That is a lightning round of 4 questions. So like I said, hoping to do more of these. This is episode number 1, January 30th, 2020. We'll see you next time.